Welcome everyone. Thank you for joining us today on our 21st webinar. Today with us are Gonçalo Santos and India Boyer from Hatch Accelerator. They will give a presentation on the journey from research to commercialization. Gonçalo has a biotechnology degree from NOVA University of Lisbon in Portugal and MSc in aquaculture from Wageningen University in Netherlands. He has extensive background in the aquaculture sector, having worked for large corporations where he held global positions in R&D, innovation, product development, and technical management. At Hatch, Gonçalo works with innovation services clients, building up their innovation pipeline, and support Hatch portfolio companies to bring their innovation to market. India Boyer, she holds a BSc in Ecological Sciences from University of Edinburgh. Prior to Hatch, India worked as investment associate at Passion Capital Investments, an early-stage technology investor based in London, and had direct involvement in 22 deals. Her passion about the environment and sustainable aquaculture led her to Hatch in early 2019, where she now works as a Dealflow Manager. Her main role is to source, analyze, and select early-stage aquaculture startups for the Hatch Accelerator Programme and for Hatch Innovation Services clients. My name is Anna Viskovic, and today I will moderate the session. This webinar will last for approximately 45 minutes, with 30 minutes of presentation time and 15 minutes for questions and answers. During today's presentation, you can send us a question in a private message referring it to Anna. Once the presentation is finished, you will be able to talk directly with Gonçalo and India. So please let us know in a message if you would prefer to have your microphone unmuted. Dear Gonçalo and India, many thanks for joining us today and willingness to present the journey from research to commercialization webinar. We are really looking forward to hear more about these important topics in the aquaculture sector. So please feel free to start with your presentation.
Thank you very much, Anna, for the very nice introduction. And welcome everyone to the EAStalk on the journey from research to commercialization. So I will skip this first slide just to mention that with me is Indy Boyer, and she will take the second part of this presentation. We both work at Hatch, and just very briefly some words about Hatch. Hatch is global catalyst for innovation, for aquaculture innovation and alternative seafood. We are more known for the Accelerator Program, as Anna mentioned, but Hatch also has two other different business units, one being the Hatch Fund, who invests in early stage companies on sustainable aquaculture and alternative seafood, and also the most recent business unit is the Hatch Innovation Services, which provides services to different stakeholders in the industry, namely the industry players, investors, and also governments. So with multitudes of services around innovation, capacity building, organizing workshops, and fostering for aquaculture innovation ecosystems. So with that, I just would like to set some expectations around what we mean by research. Of course, many of you in the audience have a research background. Not everyone, of course, but basically we can split research between fundamental and applied research. The fundamental more focusing on scientific discovery with a motivation to advance knowledge and driven by curiosity, and also with the objective to clearly understand the mechanisms behind some observations. And when we talk about the applied research, we are talking more about technology application into solving problems, with the objective come up with solutions and really focusing also on value creation. And that's where innovation gets in, and I like to talk about innovation, about the process of coordinated activities, because there are some steps that are advised to be followed to get into the right track, and those coordinated activities should definitely be linked with identified opportunities around value creation for a specific organization or a customer. So it's really clear that when we talk about innovation, we are talking about value creation, and when we talk about this coordinated activities, we are considering the ideation, so really looking for what idea is coming to solve a specific problem. In terms of turning that idea into something that starts to look like a product, it's definitely always good to have an early prototyping phase, which tests the validation of the product and identifies potential gaps that need to be solved, and then we can move to a different stage in terms of product development, moving towards the final solution and getting into the market. So I will also, and India also will mention some of these phases in more detail. But when we talk about bringing research to commercialization, we often start with the researcher, right? So someone that have been working in a specific area, is an expert, and develops research on a specific topic, and has then really, obviously, depending on the area and the type of project that it's involved, has the opportunity to publish and continue on a pathway to in terms of academic research, or also look more in terms of finding the value to the society that this research can bring, and really take a leap of faith into changing to a career move more in terms of bringing that innovation to the market. So not necessarily let the others find the value, but really take that process into their own hands. This obviously requires a very different skill set than a typical researcher would have, and we will touch on those topics also. So this things to be considered when we really look for commercialization of innovation is definitely the IP strategy, and we will touch on that with a bit more detail. The fact that also laboratory conditions or test facilities that are often used to develop certain prototypes definitely differ from field applications. So it's important to have a proof of concept working in the field, and often that also requires additional collection of data analysis, much in a broader spectrum than it's done in the lab scale. And of course, it's important to have an overview of what would be the market, what are the competitors in that market, and what are the needs of the market, and whether or not that market can be expanded in terms of additional applications of the technology, or even regionally. So, but we will come back to those in more detail later. Very often we see that regulatory framework is a bit neglected in the product development process, so we'll also mention that with a bit more detail, because it's a key component of the commercialization to be able to really register the product in a certain market. And so once you reach a stage where you can highlight the performance of a certain product, it's important to develop case studies that highlight the performance of that either prototype or product in a certain application, to really define also a strategy to explore additional markets and to work towards securing funding and manufacturing for the product. So just highlighting some key aspects that were mentioned. The IP strategy is a key component. It's highly valued by investors, and so in this area we definitely need to develop a cohesive IP strategy. So we need to look at avoiding and making sure that we have freedom to operate in specific markets to avoid patent infringements. Also considering that this IP protection is not only for the market, but also the fact that throughout the process you engage with partners and definitely need to also safely share information on the technology and innovation with those partners. It is a very specific field, so very often we see that startups or companies really rely on external support, and this can be drawn by technology transfer offices. Often universities also have an IP support, and incubators and accelerators like Hatch Accelerator also provide that support. So it's something that it's not intuitive. So it's definitely important to get the right people and the right advice in that area. In terms of the proof of concept, as I mentioned, it's really critical to validate whatever it's observed in a lab scale into the field and where we want to apply the products or the technology. And this really requires also considerations that even when we test in the field, this is highly depending on the conditions in the field. So different markets might have different production systems, different technologies in place that really impact the performance of specific products that we might be trying to introduce. There might be some skill sets required for the successful deployment of that technology. So at this stage, it's also critical to evaluate when we do this proof of concept, if in a specific field situation this skill set is existing, and also make sure that you perform these studies in the right timing, considering also the different environmental factors that can play a role, the life cycles of species, and so on and so forth. So there are a multitude of areas that need to be considered at this stage. But the critical point is that once you showcase the performance of the products to potential investors or partners or even customers, you are confident that the product will perform as expected in the conditions that it will suppose to operate. So that brings me to the different markets where you'll definitely be operating, and India will also explore this with further detail. But very often what we see is that researchers, when they develop certain research, are really focusing on the ecosystem around that. And it's really important to really broaden the view on the wider applicability of technologies into not only geographically, but also into different fields of application. So really go beyond your backyard, access the market size, and with that, it's really important to really engage in discussions with different stakeholders, conducting interviews, use all sorts of reports and data available, and really connect with people and potentially even with customers to validate the hypothesis. It's really important that you are bringing something that it's actually needed by someone. So I also mentioned the regulatory framework. This is often neglected or overlooked, but in some specific areas, without it, you cannot operate. So you really need to make sure that you are within a framework where you know where you will register the product. And there are often costs associated to it, which also are linked to the documentation of the efficacy of certain product or technology, and this needs to be balanced with the market potential. So it's really important to have that overview, in order to make sure that once you want to address the market, you can really operate in that market. It's important to really make sure that you simplify as much as possible the technology to meet those requirements and not overcomplicate. So, for instance, I've been operating a lot in the area of feed additives. And in some sub areas of feed additives with probiotics, we often see that researchers tend to test a lot of innovative material strains, which finally will be difficult to register due to regulatory constraints. So the more simple a product can be, depending on the category, the faster or the easiest would be to go beyond the regulatory requirements. And of course, there's a series of quality management systems in place that needs to be in place to detect, trace, and correct potential product deviations. And it should be said also that also for this area, we need to conduct trials to meet the demands. These are often different from R&D trials, have really specific constraints, and it's often contract research organizations already have set up key protocols that can support in this area. So also very briefly, from when you have a prototype or a minimum viable product, it's important to consider how you will scale this further. In this early development, it's very critical. It's very often the case that you have limited prototypes or small-scale batches that are often used just for the trials that are required, and also to attract additional investments. But you often you definitely need to have the complete overview in terms of scaling. How could you secure raw materials in the supply chain? How would you go about identifying manufacturing partners and production facilities that would consider cost effectiveness, regulatory compliance, and also be close to the market? So these are all areas that are important to bear in mind when developing and potentially scaling the product. And about scaling the product, what we see also is that startups or early stage companies often engage with larger corporates. India will also mention an example at the end of this presentation. And we see that this complementary arises from the fact that startups are often at the early stage of a product life cycle with a lot of growth potential for that product, and very often large corporates are already at a plateau and in stage 3 and in maturity. So they are looking for bringing the outside in and external innovations into their pipeline to continue the growth curve and avoid the stage 4 and the decline on the product life cycle. So this complementarity can be used for the advantage of the startups, also to bring additional resources that are important for scaling up the product. And when engaging with such partners, it's important to highlight how this innovation can support the partners, be clear on the resources required for each step of the development stages, and don't get really demotivated by feedback like, is the product ready, or come back when you're done. It might be that you're not talking with the right partner to develop the technology or to help you develop the technology. So be persistent and really engage with discussions to find the right partners. And so I would now move to my colleague India Boyer. India.
Great, thank you, Gonçalo, and thank you, EAS, for hosting us today. So my experience and my expertise is in early stage investments, and so what I'm going to focus on today is once you've decided about, once you have considered your technology for forming a company, I'm also going to talk about from the investor perspective what they look for. So if you're thinking of forming a company, first and foremost in your mind really has to be, what is the real world problem that you are solving? As Gonçalo has touched on, there's very different experience that you had in the lab versus in the real world. So really get to know your customers and the problem quite intimately if you're going to form a company around this solution. And what I definitely advise is go problem first rather than solution first. So really get to know that problem and think, which solution is the best thing for that problem, rather than starting with the solution and trying to shoehorn it into a problem. I believe if you start with the problem, then you have a greater chance of success. And then you also need to consider the technology, so the IP defensibility and the IP strategy going forward. Gonçalo, I think you need to make that brilliant. And then also you need to consider the team that you will form around, especially if you're moving out of research into forming a company. Sometimes it's maybe just a sole founder at the time or a sole researcher. So really think about bringing in expertise to complement your own, potentially even as a co-founder. My advice is that you need a lot of resilience to form a company, especially at the early stages, and having someone there with you can increase your chance of success. So try and find a co-founder with complementary skills to your own. So if you are heavy on research, or very experienced with research and have an academic background, perhaps you need someone with this business acumen to kind of complement you. And then also, if you're going to, when you start hiring your wider team, think about, at the very early stages when there is very little in terms of substance in your company, try and think about building the vision for that company. So selling people the vision. Where will this company be? How big can it be? And you'll be surprised by the number of people who would like to get on board with, a fast-moving agile startup. And then also you can incentivize people with employee stock option pool. So that essentially means offering employees shares in your company. This will also incentivize them with the success of the company, as well as a salary that you do offer. And in terms of the market, think about the market size. Is it big enough? I think that's definitely one question that we always start with when we're setting a company. Think about the supply chain dynamics. So it's been mentioned that consider the early stage supply chains, so the raw materials, and also the kind of later down the line, so further down the supply chain, how will your product be used, and think about whether your technology is appropriate for the market. And then definitely also think about competition, and that involves direct and indirect competition. So direct meaning a very similar company to your own, or a very similar solution to your own, and indirect meaning how else is your consumer or user getting this problem solved at the moment. Next slide, please. Thank you. And when you form this company, you really should think about how you're going to finance the early stages of it. And it could be that you are bootstrapping, so you're living off revenues and growing organically. It could be that you have a corporate partnership, or you're licensing that technology. But if you want to raise external financing to fund the company, then you will, some sources of financing are angels, so that's typically the smaller check size, friends, family, and fools, or you can look at grant bodies, and I've named a couple of them here, and then or you can look at venture capital, which are generally early stage investors, and that's the perspective that I have. So next slide, please. And so here is kind of a comparison table that I've pulled together, quite generally speaking, on angels, VCs, and grant bodies and how they compare via the metrics of stage, investment size, time, due diligence, valuations, and involvement in your company. And I'm not going to go through all of this now. I'm told that this presentation will be online on the EAS website, available to members. So this is just a resource that you can tap into later and see and kind of see what's most appropriate for your company if this is the route that you want to go down. Thank you. And then also, just most of you, if you're considering starting a company, what you'll probably do is approach. If you're approaching VC investors, you'll probably approach the earlier stage ones, so the pre-seed or the seed stage. And then the subsequent rounds are called Series A, Series B, Series C, and kind of beyond. But here what I kind of wanted to outline is what those investors kind of expect to see. And here what I've put is the minimum expectation from the pre-seed and the seed stage investors. So at the pre-seed, they would want to see hopefully a founder or a co-founder with domain expertise or entrepreneurial expertise that they're applying to the area that they've decided to launch their company in. They want to see that the IP is defensible, that you have market knowledge, and that you've identified the competition, so you aren't naive going into building out your company. And they also want to see some initial traction, so that it could just be that you've had initial talks with potential customers, and that goes some way to proving the product market fit for your company. And then at the seed stage, it's everything that's in the pre-seed plus these metrics here. So at the seed stage, we want to see, in addition, key team hires, either already brought on or identified, and with this capital injection, you can then bring these people on. And also they want to see a kind of clear IP strategy, that your technology is now scalable, so you have the foundations there ready to kind of, with this capital injection, ready to kind of build on steady foundations rather than kind of starting again. And then in terms of the market, they'd like to see a large market size, that your problem is very thoroughly understood, and that you have a route to market identified. So you've identified which market segmentation that you want to approach first. Some of the pitfalls that I see is that some companies say we can do this, this, and this, and this, but actually what is better use of startups are short on time and resources. So you want to see quite a well thought out plan of how you're going to approach one market, prove out your model, and then move on to next subsequent markets. And then on the traction side, at the seed stage, you'd want to see kind of steady growth of either users, or if you are a B2B business and you have very few customers, they would want to see reordering or any other validation that your customer is happy with the usage. Next slide, please. Thank you. And this is a due diligence checklist. When an investor is looking at your company, it will have several metrics that they're looking to kind of tick off and see that you have thought of, or that are within your investor pitch deck, which is something that you would send to an investor. This includes a detailed explanation of the problem there, and also evidence that there is demand for your product. They'd want to see that that you have IP in your company and is also scalable. Also that the IP can be protected in some way, so that which kind of leads on to, I guess, competition, which is, do you have a competitive advantage over your indirect and direct competitors, and how do you compare? Do you compare by price or sustainability or another metric? It's quite, sometimes you put it in a bit of a table or a graph, where you can see where your competitors are in comparison to you. And then if I just go back, I skip market. So if I think about the market, the dynamics, and also the size. So dynamics being, is it saturated? Is it fragmented? Is it growing? And the more material that you can provide to an investor on this point, the better, because some investors are agnostic, so they invest in multiple sectors, and they might not know your sector very well. So the more evidence you can provide on why this is an interesting sector, the better. Also include there the business model. Are you B2B? Are you B2C? Do you have subscription model? Are you a one-off payment? That kind of thing is quite useful to know. Outline the traction that you already have with your potential customers or users. Include financials, so your existing financials, and also a forecast of 3 to 5 year projections. And at a very early stage, the team is so important, and I can't emphasize enough that you should really kind of explain why that you are the best people to build this company. And you could have background, I would include some background of the academic and professional experience of the team, and also outline, are you full-time now? Do you plan to be full-time? And if you don't, if you're a researcher and you want to stay in academia, how do you plan to manage the operations of the company? And then also you would want to the company would want to know the funding history and the current funding ask of the startup, which would mean that which indicates to them that they are at the right stage. You're at the right stage for their investment scope of their fund. If you can go to the next slide, Goncalo. Thank you. And this leads on to a question that I'm very frequently asked, so I thought I would highlight it here. Often I'm asked, how do you value your company? And valuation of a company is simply how much your company is worth, and therefore how much price per share your company receives. And typically, valuation increases over time, and risk decreases over time. So at a very early stage, you often have very little to go on, very little track history, so the risk is much higher and the valuation is lower. And some ways to value your company is sum of all the parts, so both the intangible and the tangible assets. You could also compare with companies seen in comparable companies in the market. And you can also use something called a discounted cash flow or EBIT multiples. These are both very much used for later stage companies with much more of a track record in terms of revenue. So I'm just going to stick with, I'm going to explain a little bit more about early stage and where you think. So for early stage, really, for pre-seed and seed stage, you should expect to give away between 15 and 25% equity for each significant fundraise. And really it is a combination of three things. One, the potential and the momentum that your company has, how much money you need, typically for the next 12 to 18 months, and also how much money you're willing to, how much equity you're willing to give away. And usually it's a bit of a negotiation and back and forth with your investor to come to a valuation that you're both happy with. Next slide, please. Thank you. And just to explain a little bit more about Hatch, we are an early stage aquaculture and alternative seafood investor, and these are our focus areas: ingredients and nutrition, health and genetics, farm, software and hardware, alternative seafood, which includes cell-based and plant-based, and also supply chain. And the next slide. We have made investments in 37 companies globally, and these are the locations of our companies. So we've made investments in South America, North America, Europe, Asia, Australasia, and we have got a very wide network of both industry and also investors. And so what we do is every year we run this, or we have run this accelerator program where it's a global call for companies. And then during the accelerator program, we bring them to our 3 locations. Of course, it was disrupted last year because of COVID travel restrictions, but we have introduced them to our network in person before, but also we now have a virtual network of all our industry partners that we connect our portfolio to hopefully increase the chance of success for those companies. And just one example to maybe inspire you if you are an aspiring researcher with a technology. I'm just going to give one example of our portfolio company, GenetiRate. And they have a patented technology on the sorting of eggs and embryonic fish and spat based on their metabolic rate, and it was developed at the University of Arizona. And we invested beginning of 2019, and they've worked with Hendrix Genetics, and they are currently in very exciting discussions with industry at the moment. So really, this is just a bit of inspiration. This could be you, and if you are thinking of having, if you have an idea, or you have formed a company yourself, Gonçalo or I would be very pleased to either bounce off any ideas, or if you want us to consider you for investment, we're also very happy to do that. And I've included our emails in the final slide here. Great. Well, thank you very much. And if you have any questions, then please either unmute yourself and you can ask the questions, or you can send them to Anna.
Thank you very much, Gonçalo and India. It was a really great presentation. We already have a few questions for you. So my first question, I will start with Susanna. She's asked, she said, interesting presentation. I have a question. What other ways are there for protecting IP without being a patent? Thank you.
Well, maybe I can take that one, and thank you for that question, Susanna. So there are actually four types of intellectual property protection. The one that also we mentioned was patents, and then there are trade secrets, copyrights, and trademarks. So for technology, often people choose between patents or trade secrets, considering different aspects. So in a trade secret, you need to behave in a much more careful way in terms of not disclosing those trade secrets, and then copyrights and trademarks are for different aspects. So more either expressions or even logo types and so on. So intellectual properties around these four areas.
Thank you, Gonçalo. The next question will be from Anna. So I'm working for a startup, and we are currently conducting market analysis. Unfortunately, no potential customer is willing to give us any information via pools, etc. What would be a good alternative way to get reliable market information, especially regarding production practices?
So I don't know, India, or maybe you want to take this one, or?
I don't mind. Maybe I can start off. So thank you, Anna, for the question. So in terms of, I think that sometimes, potential customers are quite protective over their processes, and maybe don't want to share, for example, how much they would want to pay for you, because they might want to keep a negotiation tactic to once you get to that point. So they might not give you a correct or even an answer, or they might give you an answer that's too high for your product. So really, I would suggest try and talk to perhaps try a different approach with these customers. So if you're going and saying, would you buy this technology, then perhaps change tack and say, could you tell me a little bit about what you would look for in this industry, so you could get a bit more insight for when you're building your business model. I also think that it's great that you're speaking to potential customers, and I think that could be great when you're talking to an investor. If you bring up these names that you've spoken to, potential customers that you've spoken to, it might not mean that you need a letter of intent, but it is great that you've established contact, and as long as you don't have a flat no, and you have a little bit of wiggle room to potentially continue work with them, I think that is probably a good sign to an investor. Sorry, Gonçalo, I don't know if you want to add to that.
Maybe I can also add that, in terms of also collecting market information, you can also try to contact not only the customers, but organizations of specific areas like producers or that organizations that would represent the customers you are trying to target, and those ones might be able to refer you to some specific customers or partners that might be more open to share some information, or they might be sharing information themselves.
Thank you, Gonçalo and India. The next question will be from Robert. Pooling resources to start a company. Do we have some donors which are focused in supporting youth in aquaculture worldwide?
So I guess Robert is referring to potentially investors more focusing on youth or students in aquaculture. So India, do you want to mention that?
Yeah, absolutely. So for sure there are some initiatives that, for example, even Hatch has run a couple of workshops before where it doesn't necessarily have to be an incorporated company. You can be a group of students who have an idea, who want to kind of test out that product. So there is that available. But in terms of donors which are focused on support in youth, there are probably also these competitions, like pitch competitions. So again, it doesn't have to be a formed company, and those are sometimes attached to large conferences. So you could apply there, or they can be attached to universities. So you can pitch in the entrepreneurial societies there to see if you can get capital to be able to for a proof of concept before you decide to incorporate the company. But yeah, in terms of a VC, there aren't very many that invest in if I'm interpreting the question correctly, there aren't that many VCs that will invest in just a research project that is not an incorporated company.
Thank you, India. The next question is, what are the good research ideas to get commercialized, in your opinion?
Again, no?
What are the good research ideas to get commercialized?
Well, I think that's a
the million-dollar question.
Question, but definitely those are ideas that come along with all sorts of work around the topics that we mentioned in terms of consolidating the market research, the IP protection, also the efficacy of the product. So you really need at every step of the innovation to really challenge and make sure that you're covering all the areas in a very comprehensive way. So they are ultimately the ones that fulfill those and attract investments are the ones that will keep succeeding and reaching the market and then growing with it.
Thank you, both of you. I would like to remind you all that it is your last few minutes to send the questions. In case you don't send us now, you can email Goncalo or India. But I can see now a comment from Dharani. As a startup, when you are looking to partner with an incubator, what are the factors that an aquaculture startups need to consider?
So I'm happy to answer that. So the differentiation between incubator and accelerator is incubator is generally speaking they're venture built, so the firm comes up with the idea, brings the team in, and they own typically between 30 and 50% of the company. An accelerator is there's an already formed company, and you then get investment, and typically the investment firm will own between 5 and 10% of that company. So that's the difference there. So I think that what you need to consider if you're both for the incubator and the accelerator, how much equity are you willing to give away? If you already have a company formed, perhaps you think about the accelerator route, and I would think about also, is this accelerator right for you? Does it have the right connections within the sector that you want to go in? Hatch has a great aquaculture network, but you could also think about, do you need real hardware help, for example? And there are a couple of hardware accelerators out there. So I think you definitely should think about what value can they provide to you, because you're giving away equity for this, and also you just think about the terms of the investment. How much money are they investing in you? How much equity are they demanding of you?
Thank you, India. The next question is, what are the main reasons that startups fail? There are many factors that you mentioned that could lead to failure, but what are the most frequently occurring ones in your opinion?
I would say that sometimes it's product market fit. Does this, are you able to sell this product into the market? Sometimes you start with a great idea, but there's very little reaction from the market, which might mean that investors aren't super excited by it because you're not getting this traction, which will also mean that you'll run out of money. So I think put a real emphasis on who are your customers. If it's a very long lead time to you actually getting revenue, that's okay. You can argue that to an investor, and a sophisticated investor will get it. But if you are a fast consumer product, for example, you need to be able to sell your product into the market. I also think that team dynamics is a huge reason why companies fail. Do you have the right partners that being co-founders, are you aligned with the same vision of the company? Of course, the vision can shift, pivot as we call it, but you need to be able to overcome a lot of obstacles with that other member of the team. So you really do need to pick the right partner at the beginning. Yeah, I'd say those are kind of the two biggest reasons.
Thank you, India. Thank you, Gonçalo. We are closing now the question and answer section. So as I mentioned before, if you have any other questions for Gonçalo or India, you can email them. They left their email on the last slide.